Welcome back. You're watching First Trades right here on ETNow. Let's touch base as promised before the break with the management of the Murugappa Group. Vellayan, who's the executive chairman of the group, joins us on the show right now from Chennai. Mr. Vellayan, thanks very much for taking out the time. First up, what's your growth strategy for the Murugappa Group for FY13? Will it be a year of consolidation or will you focus on growth?
Yeah, on the back of a 31% growth last year, we are looking at FY13 a little more cautiously, and the reason is that we see the GDP growth in itself being lower than in the past, and we also see a situation where there's a cost push in raw materials, power, transportation and finance cost, and this leading to an overall effect on the demand of products. And as we get into the second and third quarters, we believe that there could be a slowdown in some of the markets that we are operating in.
Morning, Mr. Vellayan. This is Nikunj Dalmia also joining in from the Mumbai studio. So what will drive your group's FY13 revenue line? Inorganic growth or organic growth?
Yeah, our strategy has been about 25% of growth coming from inorganic, and we stay with that. We're always on the lookout for strategic fits to our business. So we'd like to grow about 70 to 75% organic and the rest of it inorganic. For the year 13, we're looking at about 25% growth overall in the group. Some sectors will grow faster than the others. We believe that the growth in the sugar sector, finance sector and insurance and fertilizer sector, largely on the back of increased capacities that we have created, should give us this growth.
Right, your fertilizer business faced some headwinds in FY12 on the back of sharp rise in global raw material prices. What's your outlook for fertilizers in FY13 then?
In FY13, although international raw material prices have come down, the Indian government has also reduced the subsidy. And right now we are seeing a situation where we entered the first quarter with negotiated prices, for instance on phos acid at $850 per ton compared to last year's last quarter at about 1,060 or 960. So it has been a reduction. But the weakening of the rupee does pose some challenges for us. The question is that if the rupee stays at around 53, 54, I think the market will take it. If it goes anything lower than that, then I think we'll find it difficult to pass it on to the customers.
Let's look at specifics now. What is your outlook for the fertilizer sector for 2012? Are you expecting some path-breaking development in the fertilizer sector on the policy front, and do you believe urea decontrol will see some light of the day in this year, which is 2012?
No, I think there are two aspects on urea. One is the urea investment policy, and secondly is the reduction of subsidy on urea. On these two fronts, we expect some policy announcements in the next few months. And this is extremely critical to, one, bring in self-sufficiency in terms of capacity creation, and also in terms of balanced nutrition, urea needs to be subsidized much less as opposed to what it is today.
Gas availability, of course, is still a concern for the sector. Do you believe it is pertinent to decontrol urea at a time when gas availability still remains an issue?
What happens is that, you see, it's a pass-through. So ultimately there are situations where there are companies, who have a track record of producing urea, and they've filed their application. And I believe self-sufficiency in urea in the long run would be useful for India.
Mr. Vellayan, your discretion, how do you want to answer this one? I'm going to ask you a direct one. Is the Murugappa Group looking at acquiring stake in UB Group's or UB Group's stake in Mangalore Chemicals?
It's unfounded. We are not in the race.
So post Sabero Organics acquisition, are you scouting for more acquisitions in the fertilizer business?
It'll take us a year before we can digest and restructure, and right now we are in the process of doing that, so we'll look for something after that.
In tubes investment, you're lining up expansion in auto parts division. How much are you spending and what kind of demand are you foreseeing in the chain segment especially?
Yeah, in tube investments, we have a capex plan of about 400 crores for the year 12-13. It will largely go into two plants. One is a large diameter tube plant and the second is a tube plant in the north. The tube plant in the north will cater to the two-wheeler segment. The tube plant, large diameter, will cater to the hydraulic tubing segment, which goes into the auto and the earth-moving industries.
Mr. Vellayan, really appreciate your time and thank you for accommodating this interview request. I just want to look at some of the group stocks, especially Coromandel Fertilizer and Tube Investments. These stocks